Eins. Live. Okay, perfect. We are live to today's roundtable from ITSA about the rise and fall of Terra, the Terra blockchain, the Terra ecosystem. I want to welcome our three wonderful guests we have here today, Thomas, Marcel, and Valentin, and also the audience that's here today. We will structure today's roundtable a little bit like that. In the first 40 to 45 minutes, we will explain what is a stablecoin, what different stablecoins are out there, what happened to Terra, could it have been prevented, and then in the last 15 to 20 minutes, we want to allow a little ask me anything. So feel free to write your questions in the YouTube chat, and then we will gather all these questions, and in the last 15 to 20 minutes, they will be all answered. I would suggest we dive straight into the introduction. Just briefly explain who you are, what you're working on, and basically also like how you are associated with blockchain. I would suggest, Thomas, would you like to start?
Sure. Thanks, Christian, for having me on the roundtable today, and glad we have so many people on right now. So just very briefly, I'm the Chief Investment Officer of Rudy Capital. And in short, we want to make DeFi investable and accessible. And what we're doing is in-depth market research in the area of decentralized finance. We build risk and return models, and we also build portfolios and simulate portfolios and validate all kinds of different models that make it easier to identify, measure, assess, and mitigate risks all around DeFi.
Thank you, Thomas. Then Marcel is next.
Hey there, welcome everyone. My name is Marcel Kaiser. I am an economist and a business developer at Polycrypt. Polycrypt is basically the German company to build interoperability and scalability solutions for different blockchain ecosystems and to help companies use the blockchain technology. And I'm also a co-founder of a not yet revealed project dealing with the risk of DeFi options of enterprises and retail investors. Really looking forward to today and handing over to Valentin.
Thanks, Marcel. I'll keep it short. My name is Valentin Kalinov, and I'm Executive Director at ITSA, and we do global standards for the global token markets. So basically, we identify tokens uniquely by our unique identifier. We classify these tokens using our comprehensive framework, and we store these in a database where our community members can access and analyze and use for their own purposes. We are also further involved in community work, as you right now watching this webinar with Christian leading. So yeah, let's jump into the topic, Christian.
Perfect. Thank you, Valentin, and also Marcel and Thomas. Yeah, I mean, this was a very turbulent past 2 weeks we endured, right? With like everything that was happening in the DeFi space, more than 100 billion value of lost and total value locked across all DeFi blockchains. But before we dive now into like what happened to Terra or like to Luna, I would like to start with like a smaller like introduction question. Maybe we could first answer what is a stablecoin and what is a stablecoin usually stable to? Who would like to start?
Sure, I can go ahead. Okay, yeah, to get everyone on the same page, a stablecoin is basically just a token that has a stable price, usually with a one-to-one relationship relative to another asset. Usually we refer to fiat when we talk about stablecoins, but strictly speaking, you could also consider, for example, red Bitcoin as a Bitcoin stablecoin on Ethereum, because in the end it is just like many other stablecoins, not the thing itself, but rather a representation of that value in a blockchain ecosystem.
Mm-hmm. Perfect. And then stablecoins, like as we know them, Tether, USDC are like the two most prominent one. Like stablecoins try to maintain this one-to-one exchange rate to, for example, the US dollar, or how you just said it, to the Bitcoin. How is this stability guaranteed?
I can jump in. Well, we have different types of stable coins. We have the USDC is basically a tokenized fund where you can exchange your USDC token for $1 at the bank, and you have also collateralized tokens like DAI, for example, which is over collateralized stablecoin. Then you have coins which are not very used with off-chain collateral. You can have a stable coin and have gold reserves somewhere stored in Singapore and just offer redeemability for that coin. And we also have the algorhythmic stable coins, which try to not use any collateral to keep their peg to the US dollar. And many of these have failed in the history of blockchain because algorithmic stablecoins are very innovative. There is huge innovation happening there. The problem is it's new technology, it's very volatile, and not having collateral to backstop your token, sometimes it goes into a dead spiral. Yeah.
Mm-hmm. So as I understood it, so we have tokenized funds, which is something like USDC and USDT, then DAI, which is crypto collateral, over collateralized, and then some mixture also with like algorithmic things, which mostly use like arbitrage. And now for the Terra ecosystem, I think it was always like about 3 tokens, right? I think it was TerraUSD, Luna, and also Anchor, and these 3 protocols or like tokens had a relationship, and I think it would be maybe very like beneficial if maybe Thomas like can roughly explain on like how these 3 tokens were connected or how they were in a relationship.
Yeah, I think it's that's a very good point on talking about Anchor protocol, because it played a huge role in all of what we've seen in the last couple of weeks. So Anchor protocol is basically a lending protocol that was indeed a bit revolutionary in terms of allowing interest-bearing tokens as a collateral, meaning staked Ether, for example, as a collateral that has yield in itself, making it able to provide better yields than some competitors. But the main thing that we have to take a look on here is how did they maintain that high yield? So how did Anchor get popular? They got popular because they were able to keep a pretty constant rate of return for lenders. So you could deposit your UST stablecoin and get I think 19.5% over several months, and that was pretty crazy at times. And it got even crazier when we basically entered the bear market and everyone was kind of swapping their tokens into stablecoins in a pseudo security stablecoin, basically. So that's actually when the total value locked in Anchor protocol exploded up to, I think, $12 billion at its peak. So a lot of the Terra USD supply was actually held in Anchor. So just keep that in mind. I think it becomes clear during the next couple of minutes why that plays an interesting role. And so we have Anchor. I think the Anchor token is not as relevant as just the fact that Anchor as a protocol played that role. So and the UST stablecoin, I think we've touched on it briefly, is a fully algorithmic stablecoin. And I think what's very important to note here is that it's a stablecoin implemented on a layer 1 blockchain. So it's not an isolated algorithmic stablecoin. So it's actually very strongly interconnected to Luna and the blockchain. So one could argue that it's implicitly backed by the inherent value of Luna, and hence by the inherent value of the blockchain behind Luna, the Terra blockchain. So how those 2 tokens typically work together is that once UST is under peg, for example, you can go ahead and swap it, or as they call it in the space, burn the token and get the dollar equivalent of Luna tokens. And it also works the other way around. So that mechanism proved to be very efficient and scalable. It was actually very astonishing what happened, because that was the first algorithmic stablecoin that reached actually such heights, and it was remarkable to watch and almost too good to be true. And a lot of people thought it would be a ticking time bomb, and I think we can certainly answer that question now that yes, indeed it was. Yeah, so that's basically how those two tokens work together. And I don't know if we should go into the timeline a little bit more about what actually happened. Christian, is that something you want to do right now, just to, kind of tell how it happened?
Yeah, like we can also touch right now on that. Just like a quick question, like you just said, it's 19.5%. So that's like way over like the average rates, right? That you would get for regular stablecoins. Like
very good point. Yeah, I forgot to add that. So basically, the actual net return that is possible in a sustainable way would be around 8 to 10%, depending on the staking yields of the collateral and the borrowing demand. But so what Terra did was they wanted to fund the growth of the Terra ecosystem through Anchor, basically. So they just artificially funded the Anchor protocol, bringing funds, in that case UST, onto the Terra blockchain, and then just try to fund growth of the ecosystem, and just hoped that once other projects get ready, those funds stay on the blockchain.
To add on that with a few sentences, it got so absurd with the funding that even if you were borrowing funds on the Anchor protocol, Anchor, under certain conditions, subsidized that. And they gave you Anchor token, so that there were more than enough scenarios where you actually took a loan and got money for that, just by taking the loan, doing nothing else. So it was heavily subsidized, and basically both lenders, they got 19.5%, and also borrowers, they got also something. Still, of course, the balance was not existent. There were so many lenders and barely any borrowers, which makes the rate of 19.5% even more absurd. So that's been one of the key attractors of the Terra ecosystem, I'd argue.
I totally agree, and I would like to add a few points to that before the crash, almost 70% of all UST was sitting at Anchor, not doing anything, only staking to earn yields for that. And there was this problem of too many stakers and too few borrowers. So there was discrepancy there was imbalance in the system, where you had too many people who wanted to stake and too few people who wanted to borrow. And Terra was working on that, introducing more types of collateral to offer more borrowing opportunities. But I guess it was too late. Yeah.
Mm-hmm. Yeah, I see it exactly the same way. So for me, Anchor was at 19.5% was always somewhat like a marketing expense, right? So what they really did is they took a stablecoin, an algorithmic stablecoin, and it was not only a stablecoin, it was like an investment opportunity, right? Like people were holding UST also with the main objective to obtain like these 19.5% yield. I would go already to the next question, that like for TerraUSD, the stability of the peg is supposedly to be maintained via arbitrage. Thomas had already that explained before. And for Tether or USDC, we have this kind of redemption process. And for DAI, we have this kind of collateral that would be sold on the open market whenever basically it falls under a certain threshold. So maybe we can now touch a little bit on the arbitrage mechanism of TerraUSD. What's your opinion on like why did it fail? Because like in theory, Luna is the volatile token which should absorb all the volatility that arises from TerraUSD. How was it then possible that Luna didn't fulfill like this objective?
Yeah, so as far as I understood it, I've already mentioned that you can, if UST is below peg, you could redeem it in theory to the dollar equivalent of Luna tokens. So to the amount of Luna tokens that are equivalent to $1. And that mechanism holds true for a certain sell pressure. So there's a certain throughput the system allows in redemptions. And once selling pressure starts being higher than the actual throughput possible, then you lose that kind of mechanism, right? Then you can't redeem UST under peg for the dollar equivalent of Luna tokens. And that's actually the situation that I've closely monitored. So I've went to the website and tried to swap tokens at different states. And it was impressive to see that the mechanism didn't work at all when we went below, I think, around 90 cents, and it completely stopped working below 65 cents. So that was very interesting to watch. So I know, Christian, that we two have already talked about the redemption rate of the protocol. So that was certainly an issue. And I think that the problem that resulted from it was that in the end, you can see UST as a liability and the Luna blockchain as the asset backing it, right? And once you have more outstanding UST, then you have Luna tokens in value backing it. You know, some people are not going to make it because there is not liquidity for everyone to escape. And that was indeed very tragic because all the professional guys and funds, I mean, they become aware of such a situation very quickly because they monitor it very closely and all day long. But retail does not. So, and a lot of people went into Anchor, a lot of retail people, because it was just very simple. It was a good user experience. All you had to do was install your MetaMask, go to Anchor, and there was even a fiat on-ramp. And there you could put your credit card data in it, and you could load up your UST and put it in. And I thought that was kind of tragic because the funds realized very quickly, oh, okay, there's something wrong. We're going to 99, 98 cents. And they used the liquidity that was there to escape on time. And yeah, that caused a very, very bad situation for many people.
I can also add a few points to give a better understanding to the viewers. We have the two-layer system. You have the protocol which guarantees your redeemability for your UST for Luna, and then you have the centralized exchanges and decentralized exchanges where people trade. So you use this for arbitrage because the protocol always guarantees you that redeemability, and you always have the two scenarios: UST is above $1, which is great for the system because you're pretty sure it will drop pretty soon, because basically you burn Luna for UST and then sell your UST from some other asset. So you reduce the total supply of Luna and you increase the supply of UST, which drops the price. And the second scenario is always the death spiral for all algorithmic stablecoins, where you need your second token, the Luna in our case, to absorb all the volatility. And we have the perfect market setup where stocks drop, Bitcoin drops, Luna drops from people selling Luna, and then we have a depeg where it increases the supply of Luna in circulation, and this is a further push to the bottom for the Luna price, which should be used to backstop the UST token. And before the depeg, we had around $700 million of Luna, million tokens of Luna. And after that, we end up with around 5 to 7 trillion tokens in circulation, which is not sustainable. This is, insane.
Yeah, I mean, in that process, you see from a purely design perspective, economic design, mechanism design perspective, you can see the power of feedback loops here, right? So the UST unpacked. So there was a downward pressure for the price of Luna. Then then people converted the unpacked UST into Luna, which caused that downward pressure. Then probably the attacker also sold a lot of Luna to support that process, and suddenly you're in that position quite fast that Thomas described, that went from relatively sustainable, okay, there's more liquidity behind the UST than there's actual UST, to the reverse. And then that process starts anew and accelerates. And that's why I believe the careful design of these things is like the crucial point, because we are talking about automated systems as well here. Of course, not every trader is automated. I'd argue the opposite, but the adaption process and the feedback loop is quite automated, and lots of people only need to push the button to get rid of their positions. So the speed of these things is much higher than it probably was 50 years ago when these market mechanism stuff was reinvented. So yeah, so we saw that play out, and that mechanism, that feedback loop, and in combination with the automation is ruthless. We see it in the numbers that Valentin named. I was observing that like in the fallout within 5 minutes. I couldn't even type the WhatsApp message in our group, like, hey guys, look, there's another 10 billion Luna in supply. It was another 10 billion until I finished typing. So yeah, you can see the catastrophic event unfolding before your eyes. But sadly, this time it was a large ecosystem. It was actually the second largest DeFi ecosystem that we had at the time in terms of total value locked. And that was, of course, due to the incentives put out by also the Anchor protocol. And it's actually a shame because, as Thomas said, it's probably not the big guys who also calculated that they might lose some money, lost the money, but probably the little guy who said 20%, almost 20% on a dollar. Great, I'm taking that. Who doesn't? Then again, everything was transparent, so it's hard. It's just a tough story overall. It's, by the way, nothing that tough regulation could have saved, because it was just the economic mechanism failing. It was not a typical scam of any way. Just wanted to point that out in that situation.
Yeah, I mean, there was a lot of red flags for quite a while when we look at Luna and Terra. It's always easy to say in the retrospective, right? But the case of a bank run on USD has been discussed in the crypto community for months actually, and it's not the first time that an algorithmic stablecoin failed. And a lot of algorithmic stablecoins have a very similar design. So one major red flag is the founder itself, Do-Kwon, and has always been. I mean, Do-Kwon has been a real genius in building community. He is an excellent developer, capable of doing many great things, but he was getting very cocky. In his Twitter tweets, he tweeted about the Luna price. He fought every criticism possible, and actually was able to manage a huge community behind him, blindly following him. That was very interesting to see, and I think that also played a major role. Like fighting that constructive criticism, even from intellectual people or very well-known and reputable people within the crypto scene. I think that was one of the biggest mistakes of Do-Kwon and also of Terra and the whole community around him. Yeah, Do-Kwon, large red flag in retrospective, even clearer. Second red flag, algorithmic stablecoins in general, right? As Marcel already had pointed out, that the mechanism has been transparent, and a very similar mechanism had failed before. And even one from Do-Kwon himself had failed before, which is very interesting. We know that since a couple of days that he had built a stablecoin. I think it was called Basis Cash, if I remember correctly. And he just took off, didn't work, took off, he ran it against the wall. And then with 2 or 3 of his team members, he just built another stablecoin with the tweak of adding it on a layer 1 blockchain. So that was basically the only thing different to Basis Cash.
Honestly, the what's irritating me most was the resistance to criticism. If I want to make the example of Iron Finance, it worked basically exactly the same, with the difference that it was actually somewhat safer because it did not only use its own stablecoin, but also others. So what Terra did was blatantly copy the mechanism in a riskier fashion and then shrug off all criticism, even references to that exact same fiasco that unfolded on a much smaller ecosystem. So I think all the ad hominems against him are not something that I want to promote or share, not at all, but he did not always do say and react the right way, right?
Yeah. Okay, Valentin, please.
There are also a few other things to discuss, like Terra tried to buy Bitcoin to use it as collateral to save USD in case of a drop. And we also had curve wars, or the 3-pool and the 4-pool, where they also had problems with that because they were preparing for the new pool and put out liquidity of the old one. Then publicly Do Kwon announced war to DAI, that DAI is gonna die, and look what happened. And these are also like parts of the storm that happened, and the markets like noticed that and used this as an opportunity to crush UST. Yeah.
By the way,
yeah.
Beside the fact that I'm not a big fan of using another crypto project as a backup for your own robustness, it seems like a little bit of I can't do it on my own, I'm taking that one hostage. Does anybody know how that Bitcoin was processed, where it went? Do we have details on that?
So when it happened, everything, people saw that Terra sent Bitcoins to Gemini and to Binance, but we don't have a proof that they sold. Nobody knows. We expect that they sold so they can backstop the drop of UST, but there was a second problem. By the time they had to sell Bitcoin already dropped by, I don't know, 15-20% in value. So they had much less collateral to stop the drop. So people are still investigating if they sold all of their Bitcoins to save the peg. It's not like 100% sure.
Yeah, I mean, at least according to Terra's own statements, mostly all of it is gone. And if you look at the Terra Foundation wallet, I think there is a 20-30 million left in the wallet. And yeah, as you said, it's pretty clear that they have used it. Everything else would be yeah, very interesting to not have done it in that situation.
Let me quickly wrap up a little bit of what, because we just spoke about a lot of things. I want to maybe also talk a little bit more about the Bitcoin. Just quickly for the wrap up, Thomas, you said the redemption process was like a major issue. So basically that it was not quick enough, that you couldn't redeem enough like USD for Luna, and that with that basically the depeg maintained, credibility was gone, and yeah, I would say after 1 or 2 days it even got worse, right? So this was like the one thing. Then you, Marcel, you said that there was a lot of volatility in the market, that basically everything happened so quickly that nobody really knew what was going on. And I also had the feeling when I saw the statement by Crypto.com, who said, oh, we have to revert all our trades involving UST and Luna because you were wrongly priced. So even centralized exchanges had major issues following up this what was actually going on with like TerraUSD and Luna. And Valentin, I think you also had like a very good point. You said like, I think like that 70-80% of like UST was always stored in Anchor, and that there was really no use case for it. And I think this was also that Thomas, Valentin, me, like all four of us had often discussed that if they want to prevent a bank run on Anchor, on UST, they need to have alternatives on the Terra blockchain for people to invest their UST. And this was something, please correct me if I'm wrong, but I always had the feeling that with replenishing the Anchor reserves every time again and again and again, they just tried to basically buy time, right? Is this a little bit also how that was your feeling? Because I know Patrick Hansen, he was often criticizing and saying like, oh, the reserves are soon over. What's going to happen next? And then suddenly there was always these kind of injections, right? And I was always curious, okay, where's the journey leading? Yeah. And then now again about Bitcoin. Do Kwon knew or has several times stated that the possibility of a bank run is indeed there, so that there could be this kind of death spiral. Does anybody of you think that maybe also with what I just said before, like where is the journey going? That maybe buying these Bitcoin was also somewhat like this safety parachute that where Do Kwon was thinking, okay, it's likely that the bank run might happen. I buy the Bitcoin, and maybe this is like my measure of last resort, because the general idea behind Luna or TerraUSD, I mean, was always that it is an algorithmic stablecoin, right? So once he started to collateralize it, I mean, on the one hand, talking badly about DAI, but then like taking similar measures for the collateralization, right? This is like a contradiction. Like anybody would like to comment on that a little bit?
Yeah, I totally share that concerns that you have just pointed out. I think the overall goal was always to have a self-sustaining system, a layer one that could be good enough in itself, and that doesn't need to be backed by another high risk asset outside of the ecosystem. So the measure per se was, I think, it was a very bad idea, but as you've just said, I think that makes it more possible that it was kind of a last resort, and that Do Kwon has already seen it coming. He knew something was brewing. I think that would totally make sense, because he was smart enough to understand that adding Bitcoin brings several different risks with it, right? And adding Bitcoin is also kind of let's just say he was then telling people, well, my mechanism is not perfect, right? We need Bitcoin in order to make our mechanism more secure. And you don't do that, especially not if you're Do Kwon, right? He wouldn't have done it. So I think he saw it coming.
I would like to add a short sentence. Basically, he wanted to take the ecosystem as a hostage to keep his peg on $1, because he wanted to. He said it actually. I think that that Bitcoin, if USD loses the peg, Bitcoin is gonna drop to 0 or something. We're gonna take it down with us. So
yeah, I mean, I can imagine about him having known it or not. I cannot imagine a well-funded project like Terra to not have stress tested its mechanism. And honestly, everyone who's ever stress tested or modeled these ecosystems, they know that if it can break, it will most likely break. So I cannot believe that he didn't know that this was possible. The thing is, it's possible, like Thomas said, maybe he got a good deal, maybe he got cold feet, but sure is he kind of admitted defeat when he bought these Bitcoin, right? He kind of said something's off, and that's at least a warning flag, the most definite warning flag there can be for those that know what can break will break. Yeah, I mean, was it good? Was it bad? I don't want to comment on that. I think it shouldn't have been necessary.
It's like Murphy's Law, right? What can happen will happen, and here for sure it did. What was also a bit surprising to me was all the time that he was like announcing him buying Bitcoin, right? So basically allowing retail to front run his trades on like buying the Bitcoin. We already like, for me, this was like another red flag, right? If you're like, he was basically like throwing away money, like, well, he was burning money for no reason. No, he had a reason, right? He wanted to have publicity, and he got that publicity, would make Anchor just like maybe an even bigger problem. Okay, so let me think about it. Yeah, maybe we should quickly touch a little bit on like what actually happened, because I mean, there's a lot of theories out there, right, on like how this all unfolded. Like there's like several theories, maybe who did it. I don't want to touch on like who did it, but maybe rather on what happened. Who would like to explain a little bit on what has actually happened to Luna and Terra, and how could all this basically occur?
This is a difficult question, I would say.
Mm-hmm.
I can try to like add something, and then you guys can add a few other points. But so we have a few theories. We have the first theory, which was debunked, that some kind of fund borrowed, Citadel borrowed money to crash Terra, which is not true. They had also a statement announced that they are not involved in that. But there is still this theory that somebody, after Do Kwon announced the purchase of Bitcoins, that somebody borrowed 100K Bitcoins to sell into Terra's purchase, and then use the funds to push the price down on the centralized exchanges. This is not yet fully confirmed, so I wouldn't say that's exactly what happened. We have also the theory, UST, it was a top 10 protocol, but the liquidity on centralized exchanges wasn't that high. It didn't have this adoption on centralized exchanges. So with less liquidity, people can crush your price if there is enough selling power on there. And the sell books were empty at one point on Binance, I think. And there was also the theory that actually Anchor was the start of all the depeg after people, because we had all the bad news on the markets also, and inflation and stuff, everything dropping. So people might have started to unstake their UST and sell it for something else to get out of the market. These are like theories that are floating around, and we are still analyzing what's happened. The community also not yet fully 100% sure what happened. But if you want to add something, yeah.
Yeah, I think that already described it pretty well. There was a lot of factors that came magically together leading to all of this. So for me, it presents itself more likely to be a coordinated attack, a hitman attack. Although it doesn't really play a role, right? In the end, it's not an attack that you would say is criminal in a sense, because you just use a system and point out that its vulnerabilities. You trade, basically. That's all you do. So for me, there is no real difference if it just happened through natural market dynamics, or if it's just a few coordinated players trading and swapping. In the end, we have the same result, and it shouldn't have happened. And as you already said, Valentin, the problem was that liquidity was very low, and on Binance, that was actually also very mysterious, because they, as far as I am informed, it was the case not that there was no liquidity, but the system prevented people from bidding because it just didn't enable bids under 60 cents. So that's kind of mysterious. Why the system would limit that, I don't know. But I'm not very well into those mechanisms. And on the other hand, we had liquidity dry up, and you already mentioned that on the curve pools. Based on curve governance. So that would be another topic probably for another roundtable. But what happened was that they shifted liquidity from a curve 3 pool to the curve 4 pool, right? And exactly in that moment, they started depegging. The UST started depegging heavily. So in my opinion, it's very likely that it was coordinated. Although, as I said, it's not, for me, it's not relevant in the end.
Yeah. Same for me. I mean, it's too many coincidences for it to be a coincidence. And I believe there are people who are economically and financially savvy enough to pull this off, and who have the money and who know the people. I have an addition, although that's a theory, I must admit. So whoever did this, they must have accrued a huge amount of Terra and probably also Luna and probably also a UST. And I can imagine, and that's also why Do Kwon bragged on Twitter about buying. He's not going to front run himself. I don't believe that. I believe he got an OTC deal that sounded very good. Hey, give us that amount of Luna or UST or a combination of those for that amount of Bitcoin. And then the prices of Luna dropped because that just probably got dumped. Then when people then when the depeg happened first and it remained depegged for a while, they saw, okay, there's not much reactionary power behind that. We can actually launch a full attack and it will probably work. So so they started also dumping their UST probably on Binance or wherever. And that kickstarted the panic. Without the panic, probably nothing would have happened. The arbitrageurs would have probably over the time somehow recovered it, I believe. So, and that's something I want to say in defense of the mechanism. It wasn't terrible, but you have to remind yourself that there are also people with emotions involved. And I think that's what broke the neck in the end. Yeah, and other than that, I personally also don't care if it was if it was coordinated or not. The problem is that it happened. And what can we do? How can we design these systems so that doesn't happen? Or what other metrics can we put in place that prevents or at least protect some of the users from that happening? Yeah, I was greatly astonished when I heard that on the 9th, on the evening of the 9th, our system's alarm clocks went wild. And at that point, I didn't understand why, marking a UST as highly problematic. And then within the next few hours, we understood why. Yeah, we need these sorts of systems in place. Or I mean, you, Thomas, as well, you deal with these, you scan projects for these risks as well. I know, yeah, Rudy Capital is probably also good, well prepared against these scenarios.
Yeah, I think you said a very important thing about you know, reflecting on what happened, and I think what's even more important is teaching the new generations onboarding to crypto how to navigate, how to assess risks, and not to just ape into any project that gets shilled on crypto Twitter by famous people. So there is a lot of things to do on the education side in order to onboard the masses to DeFi. And I think we can do that. I think it's very important to, you know, not downplay what happened. It was, I would argue it was the worst thing that ever happened to crypto since crypto exists. So that was just a $50 billion destruction within a couple of days. And not only that, we had spillovers to all kinds of ecosystems. We had systemic risks play out. We had a lot of retail people losing money. Many people from the Terra ecosystem have also shared stories on how they lost their houses, their wife, I don't know, a lot of things happened. So I think we have to do a better job in educating the masses and help them navigating through the space. And it's very hard to tell right now how to do that because the risks are incredibly complex, and it's really, really hard for a beginner to tell what's happening, because as a beginner you seek reference. You look, what are the people next to me doing, right? And then you see $12 billion in Anchor protocol, and you have a seamless onboarding process, and you see all the big guys backing Luna, all the big funds, very reputable people. And then you say, well, that must be something, right? They've done the due diligence, so I can now go in, and it worked, and suddenly everything was gone. And what's also important in that context, I think, is having an exit strategy for all of what you're doing. It's not only about entry, it's also about exit, and many people often forget that. And that's valid for just simple trading, but also for complex DeFi strategies. You need to think of possible scenarios, and then you have a plan on how to get out. What happens if liquidity is drying up, and how do I notice it early? And if I'm not able to monitor it constantly during the day, then the strategy might not be for me, right? Then I must admit that I better do maybe some CeFi lending or whatever is out there. So yeah, just to wrap it up, I think there is still a lot of things to be done to educate people, bringing them on blockchain, and but it's evolving. I mean, we have a lot of programs. We have DLT talents, DeFi talents here in Frankfurt, and so on. So there is something brewing, and I think we're walking into the same direction, into the right direction. But at the same time, there is a lot of misinformation and disinformation campaigns on crypto Twitter, on Discords, and yeah, people need to be more aware of that.
Mm-hmm. You just mentioned that Luna had very strong backers, right? What I saw was a tweet from CZ from Binance, who said like, yeah, we were like early investors into Luna, right? And I mean, Binance, the most successful crypto exchange, having them as a backer is, yeah, something where, you know, you should be aware that there has been some research or there has been some knowledge about how strong are like the safety measures, holding and everything. And yeah, I think he said that they made like a profit of like 300x, but now that basically Terra or Luna has failed, they want that retail gets compensated first and basically all the other stakeholders last, which is I think also the right thing. I mean, we saw like on the Terra Reddit, you just mentioned that, Thomas, like people like saying they might commit suicide and other really bad things. So I think this is also something that we have to take away from this, that there's always like the responsibility also for builders in the space to not always just be greedy, to behave like a mature person, and to fulfill like the responsibility that you have towards all these people who give trust to you, right? And I think this is something that tremendously failed here with Do Kwon. And to be honest, what I don't want to see is like over-regulation of the market, because like these algorithmic stablecoins, I think they will have a place. I mean, Frux, right, is one that's like semi-collateralized and semi like algorithmic, and it didn't depeg like USDT, like Tether. They had a depeg, right? I think it went like last week on like 96 cents or something. But Frux was actually like holding very, very strong. So it's very hard, I have to say, like to find a good middle ground between like innovation and at the same time protecting consumers. And I think this is really something that if there's regulators who want to take like a very close look at the space, that they have to find like a good balance between innovation and protecting consumers.
Yeah, totally agree here. Maybe just one sentence to that. I think one problem in DeFi that really needs innovation is capital efficiency, and that's what we're seeing with stablecoins, right? Why do we have algorithmic stablecoins? It's because they're way more capital efficient, because you don't back them 100% or over collateralize them. So there is still a lot of room for innovation, and it seems like we're going into the direction of what you just said of partly collateralized algorithmic stablecoins, because you kind of combine the best of both worlds, right? You have a stablecoin with a good peg accuracy, and you also have capital efficiency because you don't need to back it by 100+%.
Yeah.
Mm-hmm.
Yeah, I just also only briefly want to add to Thomas' conclusion. We of course need more education in that regard, but it hasn't only been Do Kwon. There have been so many experts on YouTube. Yesterday I've seen I think 30 minutes video on why of a really professional guy. He also looked really professional, explaining how Luna is the greatest innovation ever. The comment section was quite hilarious, to be quite honest. But I mean, it's not only the one influencer or the influencers, but also experts tend to be wrong. So I think in addition to education, we need to motivate people to do their own research, which is easily said. But also we have to professionalize the retail investor a little bit without requiring them to be professional, right? They need proper risk monitoring. They need maybe there are some great projects on decentralized credit scores for possibly blockchain-based peer-to-peer lending, borrowing stuff. There's a lot of stuff that's currently developing, which I believe in 1 year that couldn't have unfolded. I also hope in 1 year there are not stablecoins like that, but I also believe that the community will develop, and that we will have to see how we can, as a community, assist retail investors from these events on any front, or on multiple educational fronts, as Thomas might have put it. And yeah, that's probably the key.
And maybe we're running out of time to add a few words. It's incredible in what time we live. We have a transparent system where, like, sitting at home, you can analyze the crash of a DeFi system with $50 billion worth. And if you compare it to the financial crisis 2008, it took us so much time to analyze what happened. And now we're seeing it live happening, and everyone can analyze this at their home. And you have kids, 14-year-olds who trade on DeFi and make money, lose money, but these people will be part of a system where they only will know DeFi and not maybe your local bank. So we need to prepare for that, and future is bright for innovation. Yeah.
Thank you, everyone. Then, maybe a very last question before we go to the AMA. The unique selling proposition of UST was always that it's sensor. Or Marcel, do you want to add something? You were just.
No, I was applauding Valentin's words.
Okay, perfect. Yeah, I like them too. Yeah, and the unique value proposition of UST was always that it's a decentralized stablecoin. For the people who don't know, USDC and USDT can essentially be blacklisted by Circle or by Tether Limited, which in regard to blockchain technology, which should be immutable, makes it a bit more like the PayPal of blockchain. Because if they say, hey, these funds don't belong, for example, to Christian, they can just these are now blacklisted. Obviously, they wouldn't do so, but this was always the idea. Also, why UST got so big, right? The biggest decentralized stablecoin. This was also why they were having DAI as an enemy, because until then, DAI was always the biggest decentralized stablecoin. Maybe as the last question before we go to the AMA, what's your take now on centralized versus decentralized stablecoins? I mean, stablecoins in the first place, it's already in the name, they should be stable, right? Stability is the most important thing. Do you think that also is now the downfall of UST, that all this decentralization, I don't want to say ideology, but it goes sometimes a little bit in this direction, has also now died a little bit, and that basically we will now see more institutions taking over basically stable coins, e-money licenses, banking licenses, really professionalizing the whole space? Or do you really think that decentralized stable coins will also still play a major role in the future?
I think short term, we will see indeed what you've just described. People not trusting decentralized stablecoin projects as much as they have before. We probably see institutions entering the space with their regulatory background and telling people, we're the regulated guys, you're safe here. I think that's at least the short-term perspective. I think on a more long-term perspective, things look very, very different. We have very promising projects in the decentralized space as well, such as Frax, for example, the partly collateralized stablecoin. And a few projects are also building a crypto native stablecoin. So that's probably long term. But what's interesting about that is that, it's just a stablecoin native to the crypto world, and it doesn't have an anchor in the old world. And whenever we have a UST, a USDC, whatever US dollar stablecoin in the system, we are subject to some of the vulnerabilities of the old financial world, including inflation, for example. So I think the more long-term perspective is indeed decentralized. So we will have a growing set of decentralized stablecoins. part of them backed still to the old world, back to the old world, but also we will see a lot of crypto native stablecoins.
I mean, it's in the name, right? We talk about decentralized finance. So I'm for decentralized stablecoins all the way. I can think of more trustless ways to make that possible. I mean, is there a way to, for example, do what USDC and USDT do in a trustless way? I believe there are different possibilities to do that. I would like to see that, to have a reference to the fiat currencies in the ecosystems that, that is relatively neutral, possibly even completely decentral. It doesn't even have to be completely algorithmic. Like I can think of depositing ways, for example. In terms of algorithmic stablecoins, I think they are inherently always a little bit fragile. But all in all, I think I'm happy if they prove me wrong. And all in all, I believe that, censorship resistance is something that is crucially important. Again, we are talking about decentralized finance. Why should a centralized entity get to censor anything or anyone? Sure, there are definitely reasons from a political, moral standpoint from time to time, but that shouldn't be the spirit. We shouldn't inject that into the spirit at that point, but rather look at the entire concept. And from that perspective, I'm decentralized all the way.
A good question. I think that we overuse the word decentralized many times, because I'm willing to bet that the federal system in the US is more decentralized than Terra, because Do Kwon was calling all the decisions in the system. And I'm all for decentralized coins, but not pseudo decentralized like Terra, where you have one boss telling you what's going on and announcing on Twitter, we're buying this and selling that. So the algorithmic stablecoin is the holy grail of stability in crypto. And we're still maybe a few years away from a true algorithmic stablecoin, which can sustain its price when we have a market crash. That's why I always, when I look at the algorithmic stablecoin, I always wait for at least one major crash to see if it survives, because most of the times these coins don't survive the big crash. And this was the first big crash for Terra. And don't forget, they depegged twice before. So I think we are yet to see better solutions. There's also alternatives, like there is a RAI stablecoin where they say we're not pegging to a US dollar, we are pegging to some kind of stable value which the system finds by itself by they're doing token engineering analysis. And for now it's stable around $3, but tomorrow might be stable around $4. The main thing is, do you want to have a completely stable coin pegged 100% to the dollar, or allow for some volatility? Many questions. These are very hard questions to answer, and many people working towards developing new protocols. Yeah.
Here at ITSA, we only have hard questions, no easy questions. So, but let's now go back to like the AMA questions, because we are already quite late. The first one is from Patrick Hartmann, and Patrick Hartmann is asking, question for the AMA part: is there a Lehman effect for DeFi rising out of the Terra collapse?
I mean, let's start by what we could observe, right? The Terra ecosystem was the second largest DeFi ecosystem by total value locked. What we see was basically within a few days, it vanished completely. That, of course, teared down prices, which is why DeFi TVL generally was reduced. And I believe DeFi users fled to different places, if they could flee, which I hope. And then I believe that, for example, for Ethereum, who hasn't had a big debacle for a while, let's say, as an ecosystem, That was probably something good because it was the largest competitor. Now we are back to 60+%. I don't know, 65+% Ethereum dominance in terms of DeFi. So I think kind of the opposite of a Lehman effect, right? It wasn't like, okay, everyone pulled everything out of every ecosystem because one thing failed that had a few red flags before. So I would argue it was probably not a Lehman effect, although I'm not totally, I know what happened with Lehman, but I'm not entirely sure what the Lehman effect is, if I got that right. But I understood basically a loss of trust between the ecosystems, and that's why they independently fail. That was what I assumed in that answer.
Mm-hmm. Thomas?
Yeah, what we could also observe was that some funds, even large funds, basically got bankrupt or were forced to sell Bitcoin into the market in order to make up the losses. So that was maybe a pretty bad spillover, let's say. And that just added to a very, very bad market sentiment, almost near capitulation. So a lot of things coming together. I think what's probably worst all of this is retail lost a lot of money. We already talked about that, but there is also a lot of people that just entered the space or convinced others to enter the space that now got wrecked very, very badly, and they are leaving crypto again. So we want to make sure that people who have the courage and the passion and they just want to see what's going on, we need to make sure that they can stay and they want to stay. So that's probably in terms of long-term consequences, that was probably the worst effect, I think. So I've talked to several people that say, well, I've burned my fingers. I'm not going to touch crypto ever again, right? And it's justified in some sense. Many of them are not very diversified, so it's also often a lack of knowledge and a lack of competence in terms of investment strategies. However, I think that hurt very much, people leaving the space again.
Yeah, what I would like to add to that as well is I think we can say we were lucky that Terra is built on Cosmos, right? Because it's not an EVM chain. And if it would have been an EVM chain, we would have seen way more connections between whether it's Terra, Phantom, Avalanche, Ethereum, and all these dependencies. I think they would have made it 10 times worse than what we have seen now, because essentially, like Thomas has already explained also before, most of the turmoil has happened on the centralized exchanges. The decentralized exchanges were later empty with liquidity, and I think we can say it was not as bad as with Lehman, but only because we were lucky it was not an EVM chain. And this is a little bit also my take from it, that if this one day happens on an EVM chain, maybe for example Avalanche, I mean, there's right now no stablecoin like made by Avalanche on Avalanche, but I think this would have then very different effects than what we saw now with Terra. And then Jan Carlos is asking, will DuCon or the community have a chance to relaunch Lunar? Do you have any information on that?
There is this vote on forking Luna to create a new Luna project to keep the community around. Personally, I'm not sure this is going to work out, because in crypto, it's all about trust. Why we trust Ethereum? Maybe because we trust Vitalik. After you have this mega crash of Terra, then Do Kwon forking this to like maybe refund some of the investors with new tokens. There are many questions around, do you like fork it and keep the supply of the out forked into the new one? What happens to the out transactions? These are questions to be asked. And I'm not very positive, because once people like lose trust in these systems, especially a stablecoin, algorithmic one, you can't regain trust. We've seen it with other algorithmic stablecoins when they say we will set up some kind of fund to like keep like restore the peg after 6 months for it. It never works out. This is my opinion.
Yeah, I agree. I mean, once that is gone, that feature of converting the Luna to the UST and the crazy DeFi space, once that is gone, what sort of USP is there for Luna? I mean, there's so many generation 3 blockchains. You mentioned Avalanche. There's Polygon, Solana, etc. There's so many of them. That market is quite tight. And now the reputation is already damaged. So they would really have to pull a magic trick to come back, in my opinion. I mean, still, maybe some people get reimbursed in the hard fork. That would be a good outcome still. But then again, I don't think that will cause a comeback.
Mm-hmm. And then I would say the last question is from DM, and he or she, I cannot say if it's a boy or girl, were the tokenomics which finally led to the crash already described in the initial white paper, or further silently engineered throughout the life cycle? Yeah, I think so. The question is more or less asking, like, did like the lunar tokenomics, the UST tokenomics, change recently, or was it always more or less like this since the inception of the ecosystem?
Well, I haven't honestly, I haven't followed Terra from the beginning, but what I know, because they are set up on their own infrastructure, there was the white paper is like always the first step of a protocol. Yes, they might describe all the features, but these protocols evolve all the time. They add features, remove features. There were features for a block reward at the beginning, but they stopped it by 2020, I think. So there were no more block rewards in the system, but maybe in the white paper, it's still saying we have block rewards. Now they're funded by the transaction fees. So the white paper is a snapshot of a protocol when it is announced, and not the current state of the protocol after 2 years. So they always upgrade these protocols and add features.
And maybe to add to that, I think it was quite a functioning DAO in the end. So a lot of people were voting on it, although it's hard to tell who really has the power in its hands. But every proposal was quite transparent, so people could at least see what's going on, independent of how it goes in the end. But all the things were pretty transparently communicated and could be discussed in the broader community. So that was I think nothing was implemented that the broader community wasn't aware of.
Well, yeah, agreed. Just from a technical standpoint, implementing that, I'm not sure. It sounds like a major change. That's not something you do overnight. I can imagine that it has been around from the beginning. No idea though. What shows that what Thomas said, it was definitely well documented.
Mm-hmm. Yeah. For me, it was actually the purchases of the BTC. This was for me like the biggest change in like strategy of like Terra and Luna. And yeah, I think we are already a little bit over time. I'm sorry for making like 8 minutes longer. I have to say this was like a wonderful discussion. It made me a lot of joy and fun. And I think we should definitely redo that, because we are also planning on having another maybe like a roundtable, a panel discussion also on stablecoins in July. Maybe we could then also like go a little bit more into detail with like Frax and yeah, USDC. I mean, there's many interesting projects out there that we maybe should also take a look on now that basically stablecoins in general are like in total turmoil, right? Because this is now yeah, a very rough time for the DeFi space in general, but also like for stablecoin issuers. Okay, so I want to thank Valentin, Marcel, and Thomas for participating today. Great answers. I also learned quite some on the panel today, and obviously I also want to thank the audience for tuning in, for raising the questions, and I hope to see you next time. So yeah, still a nice day, and see you soon.
Thank you, Christian.
Thanks, Christian.
Okay.
Thanks to you all. Bye-bye.
Thanks, Christian. Bye-bye.
Bye.